Hello, fellow practitioners. My name is Gina Rodriguez. I am a principal in the Advocacy Services Practice for Ryan LLC, and I'm here to give you some really good news. The governor signed SB 711, and if you haven't been following SB 711, it is the Omnibus Conformity Bill. He signed it October 1st, 2025, and it changes our specified date for income and franchise taxes from January 1st, 2015 to January 1st, 2025, meaning we no longer have to follow the Internal Revenue Code as it read in 2015. We can now look at it as it read in 2025. And if you're not familiar with the way conformity works, we do have what's called a specified date. And I'll give you a hint. If you ever need to know what code you're supposed to be looking at, which version of the Internal Revenue Code, there's two code sections in the Revenue and Taxation Code that can help you, and that is 17024.5 on the personal income tax side and 23051.5 on the corporate side. And if you look there, you will see that SB 711, which isn't updated in statute yet, you'd have to actually look at the bill, actually changes the January 1st, 2015 date to January 1st, 2025. We've struggled in California having omnibus conformity bills, but this bill, what it did is conform to federal law. More than 1,000 substantive provisions have been conformed to. Again, we had 10 years without a conformity bill. Now, we had selective conformity throughout the years, just when we absolutely had to have it, but we never had what's called omnibus conformity. And you're probably familiar that some states have rolling conformity. Those states are really in a pickle right now because they're looking at the revenue loss associated with the One Big Beautiful Bill, or OB3. They automatically conform to those provisions. And so the only way they can get out is to pass legislation to decouple the state from those certain provisions. So we have rolling conformity. We also have what's called selective conformity states, where they go in and they select what they want. And then we have what we call in California static conformity, where we use the specified date. It's static. It remains that way unless the legislature takes action. Now, that said, they have taken action on certain conformity provisions, as I stated, over the years. But this one is huge, obviously, more than 1,000 substantive provisions being picked up. So we conform almost to, I'm not even going to give you a percentage, but a good chunk of the Internal Revenue Code. But there's certain things in California we don't conform to, and we never have. For example, bonus depreciation, 179 expenses. Now we conform to those rules, but our amounts are substantially lower. We don't conform to business interest limitation in 163J, and this SB 711 did not conform to that either. Think about the other ones with TCJA of 2017, all those foreign provisions, we never conformed to any of those. GILTI, FDII, all the other new acronyms we got. Corporate AMT, we never picked that up. We still aren't going to pick it up. But what we do pick up are these 1,000 provisions that most of your clients just don't even know that we have differences in them. And the nice thing about omnibus conformity is we have to cut down now on our separate accounting, duplicate books and records. For example, and this will still continue, say you have a federal tax credit, and you have a basis adjustment because of it. Well, for California, your basis doesn't reflect that federal tax credit. So we still have separate books and records in different amounts for certain things between federal and state law. One thing that's really, really exciting for my R&D friends, my clients that are R&Ds, that we are now conforming to ASC, Alternative Simplified Credit. This is huge because we have had alternative incremental credit, which is so complicated and so hard to track, and clients just always are in audit traps with it. That's repealed, and now we have ASC starting with the 2025 taxable year. So as you can see, SB 711 closes the gap on our compliance issues, on our complications. It reduces the complexity when you're preparing tax returns, simplifies your compliance, And it really does reduce the administrative burden, not only on practitioners, but certainly on the government as well. We get in these what's called, we have audit exposure because sometimes we don't recognize there's a state and federal difference, and we follow the federal law, and there's a state and federal difference, and we didn't make the adjustment. Kind of call that default conformity. We just didn't know. It's not reflected in the software. It's not reflected in the forms and instructions. And FTB absolutely does have a pretty robust audit program for non-conformity items. So again, it does help with all of those issues when you're filing, when you're preparing. I will tell you though, with an omnibus bill, we need to pay attention, and if there are drafting errors in the bill, which I'm not saying that there are, but with a bill this large, there may be drafting errors. We see drafting errors all the time on federal legislation. And what does the IRS do? They go to Congress and they say, I need a technical corrections bill. So then Congress passes a technical corrections bill. So that's what will happen. We will get a technical corrections bill in California come January if there are drafting errors. So just be on the lookout, pay attention to what the Franchise Tax Board releases and says, oh, there's a drafting error here, here's what we need to do. Then maybe we want to hold off on filing the returns for those clients that are impacted by that particular problem. But for the most part, I think we're going to have a great filing season. I really want to thank Cal CPA for its support. They know how important this is to its members, and I appreciate what they've done. And I'm hoping you have a wonderful filing season, and good luck with you. Thank you.